Welcome back to Copy Trading on YouTube. Today's video is called How to Set a Stop Loss and Take Profit. And in this video, I'm going to be showing you my stop loss, take profit, swing trading, automatic strategy that I'm going to implement, and I'm going to set my stop loss and take profit live on this video. But just first of all, I'm going to just go through some theory about what is stop loss and take profit. So stop loss is designed to limit the loss on stocks that drop in price. It's like insurance on your investment, and is especially useful if you're not watching the stock price or on vacation. So if you don't have time like me all the time to watch the stock market, because I have a full-time job, I also do day trading on a different account, EC Green Candle, and this is going to be for my Copy Trading Forum account. Okay, so this is going to be my swing trading long-term strategy, with mostly swing trading. And I don't know about you, but I'm not in the business of losing money. So I'm going to be showing you how I'm going to set my stop loss so I don't lose any of my profit, and also how I can set my take profit so I don't have to watch the stock market all the time, and just makes your trading easier. You need to pick a strategy that works for you though. Everybody's different. But now that the stock market is so volatile and the stock prices have risen so much last year, I'm going to go with a swing trading strategy for now for Copy Trading Forum. But here we go. So a stop loss can also be implemented into your stock trading strategy. What I'm going to show you now, my stock trading strategy, and how I'm going to implement the stop loss. A popular risk to reward strategy in swing trading is 1 to 3. So if you invest $100, you can set your stop loss at 90, or that's 10%. So you're willing to risk 10% of that investment. So your stock will sell when it drops to $90 in value, or 10%. Or you can set your take profit to 130, which is 30%. So when your investment rises to 130, that's 30% profit, it will sell the stock. So that is a popular 1 to 3 in the stock market. But I'm going to be showing you my strategy where I'm not here to lose 10%. I'm just here to take profits and protect my investment. Okay. So one disadvantage is that short-term drops in the price could sell your stock too early if you have a stop loss. Okay. So for example, if the price drops by 11%, but then jumps back up in profit, so you had your stop loss set at 90, so it dropped to $89 and it sold off the stock, but then it went straight back up to 100, you can lose that at 10%. Okay. So you got to be careful with that, but I'm going to show you how I'm going to avoid that. Okay. An advantage of stop loss it can remove emotional attachment to the stocks and can make it easier to manage your portfolio much easier. Okay, you need to set out your strategy, because not I think the hardest thing with swing trading and long-term trading is just watching the stock price day in, day out. Okay, now there's another kind of stop loss that may be useful for you too, is a trailing stop loss. So this is a stop loss that you can set to a percentage below the current stock price, not the price you bought the stock at. Okay, so for this is a different one. It moves with the stock price. So as the stock gains, so does the stop loss moves with the gain. Okay, so you're protecting your gains. So for an example, your $100 investment grows to $120, and you put a trailing stop loss of 10%, that will be set for the current $120, not 10% of the initial investment, which was 100. So 10% of your trailing stop loss would be $12 instead of $10 of the original stop loss. So with a trailing stop loss, it follows the price of the stock, and once you keeps gaining and gaining, it follows that, and it takes 10% of your current investment, and then it increases and increases. The price increases as the stock price rises. So it's safe to protect your gains. So it follows your investment. So if your investment grows to 120, it'll be 10% of 120 instead of 10% of $100. Okay. So an active trader may use a lower stop loss of 5%. Like for day trading, I don't use a stop loss, but I'm watching the stock. But if it goes below the 2.5%, I'll usually sell, because if it's gonna go for day trading, if you're gonna lose by 2.5%, I want to protect my 1 to 3% profit that I want. I look for each day, and I set it to 2.5%. But 5%, okay, if you're short term, but a long term trader may have a higher stop loss of 15%. Okay, so longer term, longer a higher stop loss. Okay, now a take profit is designed to set a price to automatically close the trade or sell the stock when a specific profit or price is gained. Okay, so this is the opposite. So this helps you when the stock price hits a price or a target that you're happy with that gain, it sells off the stock and takes a profit. So take profits are usually set for short term or swing traders, as long term traders are looking for the longer term and they want to leave the stock in for long term, so don't really set the take profit. But now the stocks have grown in price all last year. I'm changing my strategy a little bit to do swing trading on my copy trading firm account, but I'll show you how I can protect it and how I'm going to protect my investment and how I'm going to manage this account. Okay. So one disadvantage to take profit is can trigger a stock break, can trigger at a price. So it maybe if your stop loss set at 30% on the $100 up here, but the stock price goes to $150, but you sold at $130 of the investment. So you're losing that $20. Okay, so let's say your stop loss is 30% on the $100 investment, but it rose to $150 your investment that day. If you hadn't had the stop loss, you're losing the 20. But with day trading, you just can't be greedy, and a board in the hand is worth two in the bush, as I say. So when a stock breakout in price causing an opportunity gain loss, but over the long term, I think it's just safer for me for day trading, etc. I take the profits that I have, I move away and rinse and recycle and do the same thing the next day. Okay, let's start. Okay, so on my portfolio, I'm going to start with Costco here. Okay, I bought Costco about a week ago. Remember, I used the RSI model. It was below the 30% on the RSI model. It was a good price. So what I'm going to do here is I click into Costco. Okay, you can see I'm up 4.33% overall, but I bought two positions, 150. 100. I broke it up. I bought it at 312 on this one, and then 318. I opened at the other price. Okay, so you can see there I'm up 5% and 3.13%. So how to set a stop loss, especially on Ether, you just go to settings. So I'm going to start off with the take profit. Okay, so set my take profit. Okay, so down here you click take profit. Okay, so down here there's a massive number. I'm going to delete that. Okay, so the stock price at 328. So what do? I go to Google, I go to Costco stock price. So now it's at 328. But I use another website. I just type in Costco stock price prediction, and this website comes up. All this comes up first, money.cnn.com. Okay, so I go over to money.cnn.com and I look what the analyst's stock price forecast for the next 12 months is. And I look at the median price. For me, the median price is what the stock price is actually worth, for my opinion. Okay, so they're saying the low it can go down to 325, but the medium is 382.50. And remember, I bought the stock at 312 here. So what I'm going to do is I'm going to take the median price 382, and then I come to Google and I just put in Costco stock price, and I check over the last 6 months, has it hit that target? Okay, so I click on 6 months here, and you can see I check on 1 month too, because it'll be even a bigger again. It went up to 350 there, but here I can see it went up to 391. Okay, so it's possible for me. Okay, so it's hit. So Once it hit that target over the last 6 months, I'm happy with that. So they're saying 382.50. So that's going to be my take profit, guys. Okay, so I come back to my account and I put in the rate, I put in the stock price rate. So the rate is what you're going to sell the stock price at. Remember, 382.50. So I just type in that. I go to a rate here. So I just get that price, 382. Okay, so here we go, 382.50. And then I click off the screen here. So that's going to give me a profit of $33.82 on the $150 investment. So a 22.55% gain, which I'm happy with. Anything over 20% for swing trading, I'm happy with that. Okay, so that's going to be my take profit. I'm going to set that. Okay, so I update that and the take profit is set. You can see here, I set the take profit with the median price of the analyst expectation, and it's 22 point a certain percent, 88%, I think it was there. Okay, now I go to the next one, my other stock. I've already done the research, so I also set this one at take profit as 382.50. So I set the amount, so the rate is the stock price 382.50, and I click off the screen. So let's see here. Sorry, so I have to click on the rate here. So 382. So the rate is the stock price, 382 that you're going to sell stock at. I click on that. So here I got 19.99%. So it's near the 20%. I'm happy with that. I bought this at a slightly higher price, but I'm fine with that. 20%, and I'm going to update that. Okay, now I've set my stop loss there for averaging around 20 to 22%. Okay, next what I do is I set the stop loss, but I'm not in the business of losing money. Okay, but because I left this stock about a week, I can set to breed. I can set my stop loss. Okay, so I don't want to set my stop loss below my investment that I lose money. I want to set it above my investment. Okay, so I don't lose any money. And then if it does drop to that price, I can buy it again at a better price and rinse and recycle and repeat. So I set my stop loss and I go to amount here. So this is the amount of profit here that you're willing to risk. So when it goes to this amount of profit, so you can set the rate or you can set the amount. You see the amount is over here, but I'm going to go for this one, the amount. So the amount is here. So I look at this and the take profit is 33. So I just divide that by 10 and it's about $3, average about $3. So I'm going to put in $3 here. And that's my stop loss is set at $3 profit. Okay, so if it drops that low, that I'll still profit of 2% here. Okay, so I'm not going to lose any money. Okay, and it's 2% there, and it also gives it time to breathe if there's a massive drop, because you have slippage in the stock market is where the stock price drops so quickly that it takes the system so long to sell, and it might only sell it at 1.85 or something because of massive drop and it didn't have time to sell it for you. So I'm going to set my stop loss at $3 so I don't lose any money. And if it does hit that and sell off the stock, I can buy the stock again for a good price because I did my research. I know I'm buying it at a good price below the RSI. The news is pretty good. It's a big company. Remember, I only invest in major and large cap companies. So here I'm going to set that, and that's so my take profit is $33.88 and my stop loss is $3, so I'm not going to lose any money. Okay, so that update there. I'm just going to do the same thing for this one. So I go in here, stop loss again, $3, 10, divide that by 10, so I set my stop loss to amount. So the minus, if you want to set stop loss below that your initial investment. So if you want to set it to -$5, that will be 145. But I'm going to go with $3 again. So 2% off that position. So it'll sell off the stock. It drops to that 2% profit. Okay, so I'm not going to lose any money. So update that. Done. I can sit back, relax. I know I have the potential of getting 20 to 22% profit on this stock, and I'm not worried about losing any money. So I can sleep tight on that one. Okay, let's move on to the next stock. Just go to my portfolio. Let's go to Tesla. I do the exact same process. So you can see here, I bought Tesla at 569.75. I bought it here around the same price, a bit higher here on this one. But I also bought it when it was below the RSI 30. It's a massive stock. It's so volatile. So what I do again is I go to Tesla. I type in Tesla stock price prediction. I go to the first result, which is CNN Business, and the median price here for this stock is 755.50 cents. Then I go to the chart. Has it hit it over the last month? It's nearly hit at 742. So there's a good chance. Let's see the last 6 months. Yes, it's hit it. It's hit 850. It's a very good chance of this stock hitting that. So what I do again is I'm going to stick to the strategy. So 755.50. So I go to eToro and I go into the settings and I go to take profit. So set take profit. I go to the rate. So the rate is over here. The amount I'm going to sell the stock at. I'll just close off these other screens and I look at 755.50 and I can hit it. It has hit it over the last 6 months. So I put in here 755.50. So 755.50. I tick off the screen. So here I'm getting a 32.60% profit. So nice gain there, guys. Okay, it's 48. So I'm going to round it off to $50 here. So I update that 755.50. Okay, so I update that. I come and I set the exact same on. I did the research, and that's going to be my stop loss for the other stock price. And there we go. I know I can hit this. So here it's a bit low because I bought it at a higher price, but 26.45 is still a good profit. So I set that take profit. Okay. I update here and then I go in and set my stop loss. Okay. So my stop loss, that's near $50. So I'm going to round it off to 50. So I'm going to put in amount here of $5 in the green, not the minus $5. Okay, and there we go. Stop loss at $5. So if it drops to that price, it'll sell off. But what I'll do is I'll look at the stock and I'll buy it again at a lower price if that's the case. Okay, so there we go. $5. So that's 3.33% off of profit that I'll sell off. So I'll not lose any money there, and I update that. And then I come to this one. This one's a little bit lower here, guys, the profit. So it's near the 40. So I'm going to round that off to 10, divide that by 10. So I'm going to round that off to amount in the green, $4. And there we go. So 2.67%. It'll sell off when my profit goes down to $4. Okay, so I'm not going to lose any money, and then the take profit here is going to be 39.68 on a $150 investment, which is pretty good. Okay, I update that. And guys, you're probably saying, okay, what if Tesla goes to 800? If I see Tesla if I'm available on that day, I don't have to watch it. But if I am available on that day and I see Tesla is at $740, I can go in and I can remove the stop loss. So I can remove the take profit and click no take profit, and that will remove it. And then I can watch the stock price if it's going to go up more than that, and then I can take more gains. But this, I can sit back, relax. I'm happy that I'm not going to lose any money, and I'm going to gain that 2 or 3%, but I'm going to good chance of gaining that higher percentage for my swing trade. So let's go to Neo. I do exactly the same thing. I come in here to Neo and I can see here that I bought it at 35.47 and 37.20. Two different prices there. I go to Neo stock price and I put in prediction, and then the force result will be CNN. So the price here that the analysts expect over the next 12 months is 69.60. So I go to the price chart here, see that it hit that in the last month? No. Did it hit it in the last 6 months? It hit 62. No, it didn't hit it, but it averaged around 62.70 here. I know it went up to about 65 at one stage, but you can see here it went up to 62.84. So I didn't see that go up to that price. So I'm going to set it a little bit lower. I'm going to set this one at $62 because you can see that it went up to 62.80. So it can hit that price. I know it went up a little forward to 65, but look at, if I'm watching the stock in the day, I can take off the take profit and take that 65. But here, I know it can hit the 62 and it's near the medium here. So usually I'd set the medium here, but if it's a little bit below, I'll set it a little bit below. But so 60, so I'm going to set this one at 62. It hit that in January. Okay, it hit it in February too. So 62. So I'm going to come in here, go to the settings again. I'm going to take profit, set take profit. I'm going to go to the rate. So $62. I'm happy to take the profit. Here I'm getting a profit of 74.79%, which is brilliant and which is very possible. Okay. And I update that so I can take a profit of $112.19. So it changes depending on the stock price and what price you got it at. Like that's a really good gain for me. Okay. And what I can do if I hit that gain, you're saying, okay, but Neo, in the long term, I can buy again when the stock price drops again and get it at a different price and do the exact same strategy. Okay, so here I'm going to set exact same 62. So just say 62, and then the profit here is $100 on 150 investment, 66.67. So I update that, easily done, boom. Okay, now I'm just going to set the stop loss, exact same strategy. So set the stop loss, so it's at $33 there. So I'm going to average that off to $30. Set stop loss at amount $3 in the green, which is 2% of the position amount. So if it drops down to $3 off my profit, I can take that. Or you can set a trailing stop loss here that will follow this, and if it drops to $30, it'll sell. So if I was setting a trailing stop loss, I'd set it at a higher one. So let's say I wanted to set it at the $15. So I could set that at $15, and that will follow this trade, okay? So the stop loss will be at $15. So if that goes up to $50, the new stop loss will be the new stop loss would be $35. So 15 from 50 is 40, $35. Yeah. So it moves up with the stock price. Okay. So that's a trailing stop loss. So you can use that too. It's very good feature. So if I put that at 15 and let's say it goes up to $100, then the new stop loss will be $85 because it follows the amount. It follows the amount. So this is a really good feature. If you want to use that one, I might use that in the future. But here I'm going to do my stop loss of, you can see here, it's take profit. Okay, so it's 112 here. So I'm going to round that off. I'm going to put in 11 here. Okay, sorry, 1 second. And okay, so here it's going to be a little bit different. Yeah, so my profit is much higher. So take profit 112. So I'm going to round that off to about 11. So I divide that by 10. So I'm going to set my stop loss at 11. So set stop loss at 11. There we, sorry, the amount in the green at 11. Sorry. $11, so that's 7.33%. That's if it drops down to that $11, it'll sell off. And what I'll do there is I can buy it again at a even better price. So I'm going to update that. And I'm going to do the same thing for this stock price. So this stock price, the take profit is $100. So divide that by 10 and I set my stop loss at 10. So you go to the amount, which is 10. And there we go. That's $10. So if my profits drop to $10, it'll sell off the stock and I'll be keeping 6.67. And then I can buy it again at a better price. But I'm leaving a good lot of room for that to grow and etc. And if I click rate here, it'll show you the price it'll sell it at 39. And I bought it at 37.20. So if it drops to 39, it's definitely going to drop more, I believe. So there we go. Click amount. So $10 and update. So I'm not losing any money and etc. And there we go. I've all them set. And just one more stock. The last stock I bought was on Friday. So I bought this company. It came out with a mixed earning report. Remember, I did my research on YouTube. I did research. I read all the news articles. It came out with a mixed earning report, but it wasn't too bad. But it also the company is giving out some shares to the share or giving out some profits to the shareholders and dividends, etc. It's a big company. I bought it at a good price. But here I did exactly the same thing. I looked at the median price on the CNN website. I looked at it, could hit that, so I set that at 36.78. But I'm not going to set the stop loss because I'm going to be watching this stock on Monday because I only bought it because I want to give it some time, a day or two to breathe. So I'll be watching this one until it goes up a little bit more and then I'll set the stop loss because it could fluctuate between them small movements on that day. But once it gains a little bit and I'm happy that it's not fluctuating, I'll set the exact same stop loss strategy. In here, I set the take profit at 53, so I'll set my stop loss at 5, but it's not at $5 take profit, but it's not at the $5 take profit there. So I like to leave that for about a week or a few days at least to let the stock breathe and let it grow a little bit because I don't want it selling off straight away. So that is my strategy, guys. Hope you enjoyed the video. Um, like and subscribe, okay? And if you're new to trading and you want to set up a really good account on eToro, it's a really good platform for beginners. You can use my link in the description or go to buystocks.ai. Okay, and I'll see you on the next video and have a great day. Okay, peace and love. Bye.